Fears of a recession, inflation, and rising interest rates have all had a negative impact on the for-sale housing market, making it more difficult for home builders to increase the supply of houses. And a new partnership between one of America's largest banks and a growing build-to-rent operator is the latest indication that large investors are unfazed by the volatile real estate market. But why is one of America's largest banks buying up new housing supply when the market appears ready to crash? And what is the implication of this new business venture to the housing market and to regular home buyers? Early in the pandemic, single-family rentals gained popularity as property fund managers sought ways to capitalize on the high demand for suburban living. Buying or developing entire communities, known as build-to-rent, was particularly appealing in part because the projects were perceived as easier to manage than a portfolio of houses spread across a large metropolitan area. However, this year's demands were tempered by investors' looming fears of a housing market crash brought on by rising borrowing rates and decreasing rentals. But these fears don't seem to bother one major player in the banking industry. A new joint venture between JPMorgan Chase and a billion-dollar real estate developer puts America's largest bank on track to becoming the biggest landlord for thousands more rental homes in the United States. JPMorgan Chase is investing over $1 billion in rental housing. According to Bloomberg, the Wall Street Bank's asset management division has agreed to form a joint venture with Haven Realty Capital to develop entire communities of new homes, beginning with 2,500 homes in 3 Atlanta neighborhoods. JP Morgan took a similar step in 2020 when the bank collaborated on a $625 million venture with American Homes for Rent. Despite the recent cooling of the housing market, the founder of Haven Realty believes demand for single-family rentals will remain strong. And both Haven and JP Morgan believe in the asset class's strength and viability, as well as in their ability to execute. And according to Haven's founder, Sudha Reddy, we want to be delivering new housing stock and we want to own these assets. Now, phase 1 of JP Morgan and Haven's plan consists of 250 homes in these 3 Atlanta communities that will be purchased in the next 90 days. This project involves JP Morgan's asset management division, which is separate from the banking side, but it does appear to be one of those corporate synergy opportunities that will greatly benefit the company. As home buyers, though, you may see a bit of a conflict of interest here because the same bank that is currently processing your loan application stands to benefit even more if you remain a renter for life. But build-to-rent isn't actually a new concept. When consumers were unable to buy houses during the Great Recession, home builders still needed a strategy to keep increasing supply to keep them in business. This is when the build-to-rent business has really started to take off. It's a strategy in which developers build an entire neighborhood of typically detached single-family homes, which are eventually managed and rented out by an operational partner. And for years now, Fundrise, as well as pension funds and public companies, have been steadily acquiring single-family homes to rent for a profit. And yet, the very concept that is supposed to increase supply has actually only increased competition for homes at a time when many people are most concerned about housing affordability. Now, JP Morgan wants a piece of that pie too. They know all too well how the last housing crash presented a great deal for real estate investors, and they want to buy up as many homes as they can. The effect, of course, is the loss of housing supply for regular, everyday home buyers, people that actually need and want to live in these homes. While this may sound good to you if you're already a homeowner, it just continues to raise the bar on many first-time buyers' ability to buy into the housing market and forces more people to become lifelong renters. Moves like this from mega corporations and big Wall Street firms are not exactly new. In fact, they've been doing this right before our eyes for quite some time now, because that's what they do: monopolize every market that they can get their hands on. Mega corporations will always come to wherever they feel money can be made and make the argument that they just want to normalize the prices by increasing supply, but available supply isn't really increased because they're taking it off the market. This allows corporations like JPMorgan to both profit off of the interest from higher loan amounts because the housing prices are higher, as low supply raises those prices, but they can also profit off of the rents by getting you to pay down the ownership costs for them while they can continue to leverage the appreciation of the asset directly. But with the current state of the housing market, people might say, these mega corporations are increasing the supply. Then this must be a good thing, right? Well, not really, because these multi-billion-dollar corporations that have been snatching up newly built homes left and right just to become slumlords are actually creating supply only for a very specific group of people, not for everybody. And just like what these big corporations tend to do, they create a fundamental problem over several years and then find a way for them to profit off of that problem, all to the detriment of the middle class and our overall economy. In this case, JPMorgan is a mortgage company, exactly where you would go to if you want to buy a home and, like most of us, require a mortgage to do it. But with the rising interest rates, fewer people are applying for mortgages. So JPMorgan has decided to go out and buy that home that you wanted and is plenty happy to rent it out to you. This puts home ownership increasingly out of reach for many people, and people who would like to have a roof over their head must resort to renting. But renting is a lot more expensive than owning a house because the renters are basically paying for the landlord's house without owning it, all while the equity that typical homeowners get goes straight into the landlord's pocket, in this case, JPMorgan's pocket. And basically, these landlords are merely leeching off the normal working citizens who have no access to home ownership. And with the mega corporations built to rent houses, they're not going to profit off your inability to buy a new house. On the other hand, owning a house is cheaper because you'll eventually be able to pay off your house and build equity from then on. But then again, with the current socioeconomic status quo, those who own a lot of capital, especially in the housing industry, are going to be the ones who get to dictate how everything goes for everybody else in this industry. But the question is, why do we keep allowing mega corporations to own all of the supply of necessary resources for survival? Why allow these corporations to take advantage of basic human rights by artificially raising the cost of housing? What can we do to stop businesses from the subscriptionification of everything? If it were up to companies like JPMorgan, none of us would own anything, and we would all just slave away to barely pay for all of our needs every month. Let us know what you think in the comments down below. And if you like this video, don't forget to give us a thumbs up, subscribe for more content, and hit the notification bell so that you can be updated whenever we upload new videos. We'll see you in the next one.